A lot of times I'm surprised by how little rigor entrepreneurs put into financials. And what I mean by that is not just preparing the financials, but knowing them, and relying on them and using them to run the business. Uh, the way I think about it, really, when you're building a company, essentially you're building a machine, right? And the best machines consume very little dollars and they spit out a lot of dollars. And there's a lot that happens in between, but that's basically the kind of machine you're trying to make. You're trying to make a money generating machine. And uh, if I were to think about entrepreneurs as pilots, uh, the financials are the instrument panel in the cockpit. And so working with entrepreneurs that are like, oh, I don't know, or I'm gonna wait 2 weeks till we get the monthly financials out, or you'll ask them sort of, what's your gross margin, and they're like, oh, let me check. That's a real concern. As an entrepreneur, you need to be intimately familiar with all the details of this instrument panel, and you actually have to set goals for yourself on it, right? And measure your success by what's happening with your financials. And the more closely you understand them, the better you're going to be able to do to build this machine and make it work the way you want it. It's something I learned along the way as an entrepreneur. At AdMob, actually, a lot of our goals were based on the financials. So I would have certain gross margin thresholds, I would have burn thresholds. We even actually got to a point where, I would push the business, or we would push the business to being cash flow positive every 3 or 4 quarters. So let's say every 3 quarters, we would pause for 1 quarter, pause growth, and basically say we want to be cash flow positive this quarter, and that would be the goal. It is a goal based on the financials of the business. And what it proved though was that this machine is working. And then we grow for another 3 quarters, and then we'd pause and prove it again. And why did we keep doing that repeatedly? It's because as a business grows, the machine changes, right? And so you want to make sure that this $10 million business, okay, that's cash flow positive. Can I do it again at 30? Can I do it again at 50? Can I do it again at 100? I want to keep checking it the same way, again, you would run checks on any other kind of machine that you're building. And so, and there's other things you can look at. How much are we spending on R&D? How much do we have to spend on sales? How much are we having to spend on marketing? What are the inputs of this machine I'm building, and what are its outputs, and how can I make it stronger? And not only that, what are my goals for it? Where do I want it to get to in order to be a case where it's self-sustaining? I don't have to raise capital anymore. I can hire what I need to hire. I can deal with competition the way I need to deal with it. I can build out, achieve whatever goals I'm achieving. All of those things can be found in the financials of a business. And so I think entrepreneurs really need to spend a lot more time understanding them, and frankly, goal setting around those financials. Being able to have a plan, hit a plan, and build the machine you're trying to build is essentially the entire name of the game when it comes to building successful startups.